The zero-sum game reveals a shrinking American middle class trapped between rising wealth at the top and persistent economic pressures below. As wages stagnate, costs soar, and opportunities vanish, the middle erodes, exposing an economy where gains for some come only at the expense of stability and prosperity for the majority. America's shift from shared growth to zero-sum economy. The camera opens on a high-altitude drone shot of a sprawling American suburb at dawn. Row after row of identical roofs stretch toward the horizon, once the ultimate symbol of a winning hand in the global economy. For half a century, the American story was predicated on a positive-sum belief that as the pie grew, every slice would naturally expand. But as the morning light hits the glass towers of the financial district, we must confront a colder reality. The game has changed. We are entering the era of the zero-sum game, a structural shift where for one side to gain, the other must fundamentally lose. The upward mobility that defined the 20th century has stalled, replaced by a fierce competition for a shrinking pool of middle-class stability. We begin with the sound of a closing door, the metaphorical end of the open access economy. Today, the wealth of the top 1% is not merely growing alongside the rest, it is increasingly being harvested from the stagnation of the bottom 90. In this documentary, we trace the architecture of this new reality, from the hollowing out of industrial centers to the rise of a rent-seeking elite. The middle is not just shrinking, it is being redistributed. As we pull back the curtain on the modern American ledger, we find that the dream of more has been replaced by a desperate, silent struggle to simply hold on to what remains. The great squeeze of America's middle class. The signs of this zero-sum reality are no longer hidden in academic journals. They are etched into the daily struggle for liquidity and the rising cost of basic survival. We see it in the affordability gap, where the growth of house prices has decoupled from local wages, turning real estate into a speculative asset class for global capital, rather than a sanctuary for families. Economic indicators are flashing a warning. While corporate profit margins reach historic highs, the labor share of national income continues its decades-long slide. In the grocery aisles and at the gas pumps, the inflation tax acts as a silent redistributor, transferring purchasing power from those on fixed incomes to those who own the means of production. Credit default swaps, CDS for consumer debt, are beginning to tick upward, signaling that the middle class is increasingly relying on leverage to maintain a standard of living that their paychecks can no longer support. This is the stage of the Great Squeeze, where the vibrant, expansive middle is replaced by a polarized landscape of extreme wealth and growing precariousness. For the average person, the sign of the crisis is the realization that despite working longer hours and attaining higher education, the goalposts of financial security are being moved further away by a system that now views their gain as its loss. Financialization, creating a zero-sum debt trap. The mechanism of the zero-sum shock is driven by the financialization of the American economy, where wealth is extracted rather than created. When the Federal Reserve adjusts interest rates, it triggers a massive recalibration of who holds the burden of debt. In a zero-sum environment, higher rates do not just cool the economy, they serve as a vacuum, sucking liquidity out of the pockets of the debtor class and into the vaults of the creditor class. This is the debt trap. As exchange rates fluctuate and global capital flees to the safety of the dollar, the domestic middle class is left to deal with the resulting volatility in prices and the erosion of their savings. The shock is transmitted through real estate monopolies and the rentierification of essential services. When institutional investors outbid a family for a starter home, they are not just buying a property, they are capturing a lifetime of that family's potential savings in the form of perpetual rent. This mechanical extraction ensures that even in periods of GDP growth, the benefits are sequestered at the top, while the velocity of money in the middle class slows to a crawl. The shock is the moment of truth, when the public realizes that the positive sum promise of the past was an anomaly, and that the current architecture is designed to maintain the status of the few at the expense of the many. Zero-sum endgames, global lessons in asset extraction. Global case studies offer a chilling preview of the zero-sum endgame. The 1997 IMF crisis in Asia was a masterclass in how systemic shocks are used to redistribute assets, as local industries were sold at cents on the dollar to international conglomerates. In Argentina, we see the permanent zero-sum state, where repeated currency devaluations have created a society divided into those who can hedge in dollars and those who are trapped in a dying peso. Greece provides a haunting example of austerity as extraction, where the national productivity of an entire generation was diverted to pay interest to foreign bondholders, leaving the middle class in a state of terminal decline. In Turkey and Venezuela, we see how hyperinflation acts as a social leveler in reverse, wiping out the savings of the professional class while the elite, with their assets in foreign exchange and real estate, remain untouched. These cases prove that when the pie stops growing or starts shrinking, the struggle for the remaining slices becomes brutal and systemic. For the American viewer, these are not foreign tragedies, but cautionary tales. They show that without a radical shift in the architecture of the economy, the path from a thriving middle to a bifurcated society is not only possible, it is the historical norm when capital is allowed to dominate. Labor, zero-sum America, loss of agency, and hollow middle. Within the United States, the impact of the zero-sum game is felt as a profound loss of agency. The American dream was built on the idea that anyone could own a stake in the nation. Today, that stake is being consolidated by a few thousand institutional entities. The impact on the US economy is the calcification of the class structure. We see it in the wealth gap that has returned to Gilded Age levels, and in the real estate market where the average age of a first-time homebuyer continues to climb. The interest rate hikes intended to curb inflation have the side effect of freezing social mobility, as those with legacy low-rate mortgages cannot afford to move, and those without a home are locked out by high borrowing costs. This is the hollow middle in action, a generation of Americans who are overeducated and undercapitalized, possessing the skills for a high-value economy, but lacking the assets to participate in its gains. The impact on a person's life is a constant state of economic defensiveness, where every decision is governed by the fear of falling behind rather than the hope of moving forward. This zero-sum reality turns neighbors into competitors and erodes the social cohesion that was once the primary strength of the American experiment. Policy guardrails protect elites in zero-sum economy. Government and central bank responses have historically functioned as the guardrails of the elite. In every major crisis, the primary tool of the Federal Reserve, quantitative easing, has acted as a massive subsidy for the asset-owning class, driving up the value of stocks and real estate while doing nothing to increase the real wages of the bottom 90%. This is the monetary doctrine of the zero-sum game. Protect the balance sheets of the banks and the wealthy, and hope that some liquidity eventually trickles down to the worker. When inflation hits, the response is fiscal repression, allowing the real value of the government's debt to be eroded by rising prices, which effectively taxes the saver to bail out the debtor, the state. We see the implementation of austerity for public services like education and transit, while subsidies and tax breaks for the corporate sector remain untouched. This institutional bias ensures that the winners of the zero-sum game are predetermined. The government is no longer the referee of a fair market. It has become the manager of a managed decline for the many, ensuring that the systemic risk is always borne by those at the bottom, while the systemic reward is reserved for those at the top. Personal survival strategies for a rigged zero-sum economy. Personal survival in the zero-sum era requires a rejection of the narrative. If the game is rigged to extract, the only way to win is to stop playing by the old rules. This means moving away from consumerism and toward asset acquisition and self-reliance. For the individual, the primary strategy is the diversification of income and the reduction of fixed costs. In a zero-sum world, your burn rate is your biggest vulnerability. You must become a producer rather than just a consumer, whether that is through side hustles, digital assets, or local barter networks. Financial literacy must be upgraded to systemic literacy, understanding the flow of liquidity, the impact of exchange rates on your purchasing power, and the reality of the inflation tax. The useful insight for the viewer is to exit the debt cycle at all costs. Debt is the primary mechanism of the zero-sum game. It is the chain that links your future labor to someone else's current capital. By living below your means, investing in human capital skills, and shoring up real assets, land, gold, or private equity, you create a fortress of autonomy that is insulated from the extraction of the state and the markets. True security is no longer found in a job, but in the resilience of your personal balance sheet and your community. Choosing a positive sum future beyond zero-sum economics. The remarkable closing message of this documentary is that the zero-sum game is a choice, not a destiny. We have been told for decades that the hollowing out of the middle class was an inevitable result of globalization and technology, but it was actually the result of policy and power. The shrinking American middle is a warning that our social contract has expired. However, history is full of moments where the bottom 90% reclaim their share of the pie. The architecture of collapse can be replaced with an architecture of equity. The lesson for the viewer is that your economic value is not defined by a market that views you as a cost to be, minimized, but by your inherent power as a citizen and a producer. The sun sets on an era of extraction, but it rises on a new consciousness. We are realizing that prosperity is not something that is granted from the top down. It is something that is demanded from the bottom up. The game only remains zero-sum as long as we allow a small elite to define the rules. Once we understand the doctrine of exclusion, we possess the tools to build a positive sum future where work is rewarded, assets are shared, and the middle is no longer a hollow space, but the vibrant, enduring heart of a renewed American promise. Macro fractures of society, privatization, hollow middle, collective wealth. As we zoom out from the individual struggles, we see the macro fractures in the zero-sum society. It is the rise of internal borders gated communities for the few and food deserts for the many. The impact on a person's life is the loss of the public square. When the middle class shrinks, the commons, parks, libraries, public schools are the first to be sold off or neglected. This is the privatization of the soul, where every interaction is a transaction and every citizen is a customer. The insight here is that wealth is a social construct. If you live in a mansion surrounded by a crumbling city, you are not truly wealthy. You are just in a high-end bunker. To reverse the zero-sum game, we must reinvest in the collective assets that make a middle-class life possible. This includes universal healthcare, debt-free education, and public infrastructure. These are not charity. They are the infrastructure of a productive society. The hollow middle is a symptom of a nation that has forgotten how to invest in itself. By reclaiming these public goods, we can restart the positive sum engine and prove that a nation is only as strong as its most vulnerable worker. Ending zero-sum era, rebuilding middle-class resilience and prosperity. We conclude the zero-sum game with a vision of a recalibrated world. The story of the shrinking American middle is a cautionary tale for the 21st century, but it is also a call to arms for the human spirit. We have seen how the wealth gap doctrine and the final margin call are all part of a single aging architecture that is no longer fit for purpose. The remarkable message is that the end of the zero-sum game is the beginning of a grounded prosperity. We are moving toward a world where real value, the things we make, the people we help, and the communities we build is finally valued over financial sorcery. The signs of crisis were the birth pangs of a new realism. Your role in this transformation is to be the architect of your own escape and the builder of the new middle. The American dream is not dead. It is just waiting to be definancialized and rehumanized. The game is over, but the life of the nation is just beginning. As the camera pulls back, we see that the roofs of the suburbs and the glass of the towers are just scaffolding. The real heart of the country is in the resilience of its people and the integrity of their work. The future is not a game to be won. It is a legacy to be built.